Hello and welcome to another edition of Real Talk. Thank you so much for joining me. Well, I was just reading this morning that we actually had a record February of auctions. 3,217 properties went to auction in February with a colossal 79% clearance rate, which is amazing. And as all the analysts are saying, they don't really see any end in sight at the moment with the property boom, and Melbourne being the absolute hotspot, of course. They're moving the predictions forward for the time that Melbourne and Sydney are certainly, the gap is closing in terms of population. And I think Melbourne's growth is exceeding all expectations. And that's really what's driving the property market. I had to grimace and bear a conversation the other day about some young children complaining about negative gearing driving up the property prices. How droll. It's interesting because negative gearing's been here through recessions, depressions, the whole catastrophe. So it's frustrating to hear it's not negative gearing at all that's driving the property prices up. It's absolutely the amount of people coming into Melbourne and the scarcity of property in Melbourne. So I think at the end of the day, we've certainly got a little bit longer to endure these runaway prices. And I'm finding the quoting really interesting because, as you know, I'm helping as a buyer's advocate to buy property from real estate agents, and the discrepancy in the quoting certainly does my head, and I know it does all of your heads in as well. But the REIV have come out with training courses to attend, for all real estate agents to attend, because ASIC are now absolutely red hot on overquoting, and it's going to be interesting to see how that's policed, because we're now being trained that we have to quote a range and that's it. Now, as you know, I don't sell retail, so but it's frustrating. I've actually done a few little phone calls out there in the market at the moment to try and help buyers to lock in prices, and I am noticing the agents toning down the quoting. But if you over anchor a price, if let's say the recent sales have been at 2 million and they're quoting interest in the mid twos, they're anchoring at a $500,000 inflated price. So I think we're going to see a little bit of tempering of that for the moment, and I think it's going to have to happen. I think the government's trying so many different areas to slow down what is a runaway market at the moment. But what I'm finding fascinating is the changes in suburbs at the moment with the demand. As you know, I wrote a book on coffee and donuts, which is all about buying within a 10-kilometre radius, and but you really are seeing some lovely little hubs coming up around Melbourne outside of that, and it doesn't take much to change the amenity. A new shopping centre, additional transport, a cinema complex, some really funky upgrading of the local community centres, and the landscaping around is really lifting some of these areas. So it's quite fascinating. You know, it's a bit like build it and they will come, but the demand is already there. So when the improvement comes, and we were talking about St Kilda with Channel 9's taken a caveat over the Gatwick, which means that they're very serious about purchasing it. And can you imagine the change in little old St Kilda, which has become a thriving metropolis overnight? I mean, the Sky Bus is running every 20 minutes, half an hour out of St Kilda's, filled with backpackers and tourists, and of course people like me that decide to take the Sky Bus to the airport now. But if we see that Gatwick change and become the hype and the excitement, St Kilda itself is going to really benefit in terms of real estate pricing. So it really is a very changing dynamic market at the moment, not just with population coming in, not just with the whole sort of investor market, but the homeowner market. We've got the baby boomers are downsizing at the moment, and they have been the biggest driver in the market. So they're putting pressure on the middle of the market, opting out of the higher end of the market. So I really don't see much change for some time now. And I'd just love to close on the fact that if you are genuinely interested in getting stamp duty savings, it is here. We cannot reverse it. As of July 1, there will be no more stamp duty savings off the plan. So I'm going to be announcing a couple of barbecues and functions at some displays to give you a last minute chance if you're interested in going off the plan. Thank you so much for listening. Talk to you next week.